Welcome to the Business Insights Podcast, where we explore critical business topics and innovative solutions. I'm Alex, your host for today. In this episode, we'll tackle the complex world of tariffs and how Oneir and Vigilant Business Software simplifies the management of these charges for businesses. In recent years, tariffs have become a significant factor in global trade. As countries navigate economic policies, businesses find themselves needing to adapt quickly. For many, tariffs represent not just additional costs, but also layers of administrative work that can disrupt operations if not managed properly. Let's break this down with a real-world scenario. Suppose you're a U.S. company selling goods to Canada. Tariffs on these goods must be included in your invoices, tracked carefully, and remitted to the appropriate authorities. Meanwhile, if you're the Canadian buyer, you're dealing with invoices that reflect not only the product cost but also the tariff fees, which you'll need to record accurately for inventory or manufacturing purposes. So how does Oneir and Vigilant Business Software help businesses handle these challenges? Let's dive into the details. Charging for tariffs, the sales side. For U.S. businesses, Oneir's software allows you to add tariffs seamlessly to your invoices. These charges can be treated as what we call tag-along products, essentially, a line item automatically attached to affected goods. For instance, if a product has a 10% tariff, the system will create a Tariff 10% entry, linked to a dedicated general ledger account for tracking. What makes this feature powerful is its flexibility. Tariff charges can be customized and are automatically categorized under a specific product line called Tariff. This ensures transparency and simplifies the process of remitting these charges later. If you're unfamiliar with tag-along products, don't worry, our detailed manual walks you through every step. Check out Appendix 1 for more details. Receiving purchases with tariff charges. Now, let's flip the script and consider the receiving side. If you're purchasing goods affected by tariffs, Oneir's software helps you account for these additional costs. Here's the suggested workflow. 1. Review supplier invoices. Start by identifying which items include tariff charges. 2. Update costs. Calculate the unit cost, including the tariff, and optionally update the purchase order or invoice to reflect this true cost. 3. Post accurate entries. Whether you use FIFO or LIFO inventory systems, Oneir ensures that the total cost including tariffs is correctly recorded, preserving your profit margins. By following this process, you'll maintain accurate financial records and stay compliant with tariff regulations. Countervailing tariffs, a special case. Now, what happens if you're on the receiving end of a countervailing tariff? For example, Canadian businesses may face these duties when importing goods from the U.S. A countervailing tariff or duty offsets foreign government subsidies, ensuring fair competition. From a software perspective, Oneir makes it easy to handle these duties by setting them up as negative tag-along products. This approach allows you to reflect any refunds or reductions directly on your invoices. For example, you could create a CVD 10% line item that subtracts the appropriate amount from the total. Just like regular tariffs, these entries are linked to a dedicated general ledger account for accurate tracking and reporting. Managing tariffs doesn't have to be a logistical nightmare. With Oneir and Vigilant Business Software, businesses can navigate these complexities with confidence, ensuring compliance, accuracy, and efficiency at every step. If you're interested in learning more, visit oneir.com or reach out to our support team. Don't forget to check out our tag-along manual for a step-by-step guide to these features. Thanks for tuning into this episode of the Business Insights Podcast. Stay informed, stay innovative, and we'll see you next time.